Hello everyone, my name is Natkamunto Vanit. I am presenting our visual analytics tool called MiningWiz that we collaborate on with an economist to analyze the economic activities in Bitcoin mining. Let's say Alice has some Bitcoin she wants to send to Bob. To do so, Alice sends a transaction to the Bitcoin network. Once the transaction is sent, a group of people called miners will verify that Alice actually has enough Bitcoin to spend. For this service, they may receive a reward from the system. Many miners compete for this award, and it is only given by chance, similar to a lottery. In practice, miners join mining pools to increase their chance to get the reward regularly. So, Bitcoin mining can be seen as an economic system that involves multiple actors. Miners join mining pools and sometimes move from one pool to another to maximize their profit. Mining pools are competing to attract miners with higher expected reward and lower operation fees. To maintain network stability, the blockchain adjusts the mining difficulty based on the total mining resources in the Bitcoin network, called the hash rate. It also sets the value of the mining reward to control the money supply in the system. Last but not least, many external factors impact the decision of miners and mining pools, such as the market price, mining hardware cost, and electricity price. As Bitcoin mining involves multiple variables on miner behaviors, economic incentives, and other external factors to consider, we developed the MiningWiz tool to analyze how mining pools develop over the years. Time selection view provide overall statistics of mining pools over the entire period of Bitcoin. In this case, the concentration index indicates the risk that few major pools can manipulate the market. User can change the concentration index to other measures from a list and filter the time interval of interest. Let's change it to the total mining reward. We can see that the mining reward is reduced by half on 3 halving days. These days are critical because they abruptly reduce the potential income for miner. Here I select the time before and after the second halving days to study its influence on mining. The tool will update the time axis on all views. Mining distribution view is the main view as the economist was particularly interested in the organization of mining pools. We present the mining pool's market share as a ribbon chart. Each ribbon represents a mining pool and the size of the ribbon indicates by default the market share for each month. Mining pools are sorted by the market share from the highest on the top to the lowest on the bottom. Another measure can be selected from the list. For example, we select hash rate, which indicates the total computational resources used for mining. We were surprised that the hash rate had increased tremendously over the selected period. To figure out why the hash rate kept growing despite the halving day, we look at the Bitcoin statistic view to detect which factor correlate to the hash rate increase. We explore three particular factors: electricity consumption, energy price index, and market price in US dollar. We find that mining has a negative impact on the environment as it consumes more and more electricity to run the mining hardware. The energy price remained at the same level over this period. However, miners were still motivated to mine as the market price surged in 2017. Next, we want to analyze the competition of mining pools. So, in the mining distribution view, we change the measure back to the market share. We see that F2 pool and N pool dominate the market before the second halving. Then we draw a brush to highlight the top pools and observe that F2 pool had lost its market share and eventually disappeared, Why BTC.top and BTC.com increasingly became the top pool. So we reset the chart and select those 4 pools to study in more detail. What happened to F2 pool? The detail views show the characteristic for the selected pool compared with the market share as a dual axis chart. The line displays the pool fee and the background color encode 2 different reward policies. Here, the chart shows that Ant pool had a lower fee than F2 pool, and at the same time, BTC.com emerged with a very low fee. This may partially explain why F2 pool lost its market share. To confirm our hypothesis with external data, we look at the swarm plots in the news view. Each circle represents one new posting. The larger the circle size, the more important the news was. We can filter the news by topic. For example, we select the news that related to mining. Here, we find more than 20,000 news, but the view displays only 300 top news articles. We can search for specific news posting by keywords. In this case, we want to find news that mention F2 pool. We spot 3 news stories around September 2017. Checking the headline, it seems that F2 pool didn't support the SegWit upgrade in Bitcoin. So we consider this news as possible factor that led to the decline of its market share. Finally, to see the flow of miners between the pools, the cross-pooling view displays the number of miners that move between the pools as a chord diagram. The flow in the inner ring allows us to detect that some miners receive rewards from both Ant pool and F2 pool. It is a sign that some F2 pool miners may consider moving to Ant pool or vice versa. The outer ring shows the percentage of miners who join, drop out, or move to other pools over the selected period. Using the MiningWiz tool, the economist can see the overview of the mining pool evolution and detect time periods that are interesting to investigate. The tool also allows economists to relate both internal and external factors to generate hypotheses and explanations for miners' behavior. Apart from the economists who used our tool to analyze the mining economy, we want to understand whether the tool would also be useful to other Bitcoin users. We conduct a multi-week online user study with Bitcoin miners that we recruit from an online survey posting on Bitcoin user forums. The study consists of 3 phases. In the first phase, we organize an hour-long first interview to demo our tool, ask participants to perform 4 warm-up tasks, and collect the first feedback. 8 miners participate in this phase. Then we gave participants access to our online tool on their own time for 2 to 3 weeks. We asked them to fill out micro-entries when they found new insight. The form records a short description of the findings, views that participants used, and some explanation of what they found. At the end of this phase, we obtained 12 entries from 4 miners. We analyzed views that participants used in the warm-up tasks and micro-entries. Participants got familiar with the tool quickly but report that they were overwhelmed by a lot of information. As a result, they stuck to only 4 main views: time selection, mining distribution, the detail view, and news view. Miners rarely use the Bitcoin statistic and cross-pooling view. The cross-pooling data seem largely irrelevant to miners as it is not a familiar metric for their daily work. In the last phase, we conduct a final interview and ask participants to fill out a system usability survey and a slightly adapted ICE value-driven visualization evaluation. Five participants filled the survey, and four of them agreed to be interviewed. The system usability questionnaire showed an above average score of 74 out of 100. The tool obtained the highest score for the confidence of use and learnability, but still have room for improvements on ease of use. The result from ICE-T questionnaire showed that the tool obtained the highest score on creating new insights from the data. The data quality heuristic had the lowest score as we did not specifically reveal quality-related information in the tool. In conclusion, the tool contribute to the analysis of the Bitcoin mining economic system. As the scope and context of mining keep changing due to many factors, the tool can be used to monitor the activity in the future. During the design iterations with the economists, we were able to publish our findings in two scientific articles. The first article reported the evolution of the mining pools, and the second article analyzed the pool hopping behavior that has been included in the cross-pooling view. In the user study, we found that miners are initially motivated to use our tool in the demo phase. We think that microentry is a good method to capture insights from visualization tools. However, we received a low number of responses to the microentries. Participants report that they neither had the time nor specific question they want to investigate. We think that asking them to report on specific topics such as pool fee, pool hopping, or raising or declining pool would have encouraged more active use of the tool. Even though our tool focused on mining in Bitcoin, we can also use the same research question and visualization design to other blockchains, including Ethereum, Litecoin, or Monero. From the user study, we found the need for a real-time tool that can be achieved by developing an automated script to collect and update the external data. As more applications on blockchain emerge, we believe that more visual analytics tools will be needed to analyze the evolving and heterogeneous behavior in the blockchain. Our economist collaborator is still using the tool to find interesting patterns and develop the model to explain miners' behavior. You can also try the tool yourself at miningwiz.fr.